Subscribe to my channel and hit the bell icon so you never miss any video from my channel.
Hello friend, so in this video we will discuss about the ICWA CMA direct taxation paper intermediate exam syllabus 2016 group 1. The paper is from December 2017, paper 7 direct taxation group 1. Let's see, it is of 3 hour total, and the question 1 is compulsory, which will be of around 25 marks, and then question 2 to question 8, out of which you have to solve only 5 questions. So let's start with the first question here, which is MCQ type. So let's see, the first question is, when Mr. Babu paid royalty to Mr. Dr. Peter to Sweden for use to know how in India such payment is. The options are exempt from tax, accruing in India, accrues in Sweden, received in India. So well, basically if anyone can not transfer the money, so obviously exempted from tax will not come in the option. So basically his option is accruing in India. Mr. Babu has given the royalty to Mr. Peter to come to know about what is going on in India, accruing in India. Okay, let's talk about the second question. In the case of foreign company with the total income of more than 1 crore but less than 10 crore, the surcharge liable is at what percent? So option is 5%, 12%, 2%, and 1%. So guys, whenever in terms of foreign company, when more than 1 crore but less than 10 crore, then the surcharge liable is at the rate of 2% only. But if in case some other question will be there, then more than 10 crore, then that percent is 5%. But in this case, since it is less than 10 crore, so option will be 2% C. Let's see now question number third. Mr. Hari, resident in India, received 11 lakh by the way of dividend from India. The company, such dividend is exempted from tax, taxable at the regular rates, taxable at maximum marginal rate, or taxable at the 10%. Well, talking about this third question, since dividend tax only on dividend income above rupees 10 lakh, well, the new 10% dividend tax will be payable only on dividend income over and above rupees 10 lakh threshold in a year, according to the amendment to the Financial Bill 2016 approved by Lok Sabha. Hence 10% will be the answer, taxable at the rate of 10%. Since it is threshold is 10 lakh, so the 10 lakh will be considered as a 10%. Next question is, when an employee receives money on closure of national pension system trust, it is chargeable at to tax, exempted from tax, 40% exempted from tax, 60% exempted from tax. Well guys, the existing provision of section 10(12)(a) says that the payment from the national pension system NPS trust done to an employee on closing his/her account will get an exemption up to 40% of total payable. Well, the option will be here C, 40% is exempted from the tax. Okay, clear? Now let's see the question number 5. When employer contribution to approved superannuation fund, it is chargeable to tax a prerequisite when the contribution exceed. Well, talking about the superannuation means you have just like you are taking the pension. Okay, so the question is, when the contribution exceed at what rupees, so it will be taxable. So when the contribution exceed 1.5 lakh, so option A will be the answer, then it will be taxable. Next is, when the shares are held in unlisted company, it is treated as a long-term capital asset when the holding period exceed. Option are 36 months, 24 months, 12 months, 6 months. So guys, the last it was 36 months, but now since some changes are there, so now the changes will be there. So now as per the new policy, it will be only for long term, it will be only 24 month has been done. Okay, as if you want I can explain you further, like any capital asset held by a person for a period of more than 36 months immediately preceding the date of its transfer will be treated as a long-term capital asset, where that was the earlier concept. But now In case of unlisted share in company, the period of holding to be considered is 24 months instead of 36 months, with effect of assessment year of 2018-19. The period of holding of immovable property, being land or building or both, shall be considered to be 24 months instead of 36 months. Okay, fine, but in this case it will be 36 months. Let's see the question number 7. Will long-term capital gain arising from transfer of unlisted securities in the hand of non-resident foreign companies chargeable to tax of what? Well, talking about the long-term capital gains arising from the transfer of capital asset being unlisted securities will be calculated at the rate of 10% of the capital gain in respect of such asset without giving effect of indexation provision under second provision to section 48 and currency fluctuation under first provision is section 48. But ultimately, if we're talking about the answer, that is at the rate of 10%. Okay, now talk about the next question, number 8. Interest on housing loan taken by the individual being his first residential house is eligible for deduction under the section of 80EE up to a maximum of what? Well guys, it's a good news for you if you want to plan to purchase home. So when under the section of 80EE, a long tax benefit for the first time before buyer income tax deduction can be claimed on home loan interest. The deduction allowed under the section is for interest paid on home loan is a maximum up to 50,000 per financial year. You can claim this deduction until you have fully repaid the loan. So 50,000 per year you can claim for the home loan until unless you have not repaid your home loan. So option will be here 50,000 B. Next in 9, a startup. Well, the question is a startup can claim deduction under the section of 80 IAC, which is consecutive year. For how many year it can, beginning from the year which is eligible. A startup company is eligible for 3 years. So option will be here C. Option will be C. Okay, now let's talk about the next. Next is when the return of income from the assessment year 2017 is filled under the section of 139.4. The SSC can revise the return of income after the 1 year. He can revise, means 31st March 2019 he can revise. Okay, so first question we have done, and let's talk about the match the following. Okay, so the first option, additional depreciation of plant used for more than 180 days. Though to guys, so that answer will be 20%. I'll explain you. To encourage the investment in plant for machinery by the manufacturing and power sector, additional depreciation of 20% of the cost of new plant or machinery acquired and installation is allowed under the existing provision of section 32(1)(a) on the act over and above the general depreciation allowance on the lines of allowability of general depreciation allowance. The second provision to section 32(1) inter alia provides that the addition depreciation would be restricted to 50% when the new plant of machinery acquired and installed by the ASE. Well, non-ability of full 100% additional depreciation for acquisition and installation of new plant or machinery in the second half of the you may motivate the C to defer such an investment for the next year of available full 100%. So basically 20% extra is given. Next option question is basic exemption limit of income for resident individual being senior citizen. So talking about the senior citizen, well, income tax limit for senior citizen, the basic exemption limit for senior citizen 60 year to below 80 year is 3 lakh. Senior citizen can avail of several benefit in terms of interest earned on saving scheme. Next question is rate of tax of LLP. Guys, first of all, I would like to clear the LLP stand for limited liabilities partnership. Limited liability partnership. The taxation policy is similar to that of a partnership firm. From assessment year 1993 to 1994, a partnership firm is treated as a separate taxable entity and has to pay tax on its income. Income of partnership firm is taxed at the rate of 30%. That will be the answer, 30%. Apart from this, plus 2% education fees, plus 1% secondary and higher education fees similar to the limited company will be there. But for this, it will be 30% only. For your just information, 2% education fees and 1% secondary plus higher education. Next is depreciation of computer. Guys, this is very common question. So for this, write it down some act like depreciation rate as per the IT Act for most commonly used asset. Like for computer, it is 60%. Apart from this, write down some more, like they can ask you in some more in other exam, like buildings. Residential building except hotel and boarding houses at the 5% depreciation is there. Building hotels and boarding houses are 10% depreciation there. Talking about the building purely temporary is 100%. Wooden structure is 100% depreciations are there. Furniture will be at 10%. Plant and machineries will be at the 15%. It involved the motor car, bicycle, scooter. Plant machinery, buses, taxis, lorries are 30% are there. And then in computer laptops, as I said, 60%. Books owned by the ASIs will be 100% depreciated. Books on carrying a profession not being annual publication, that will be 60%. That's all. Okay, so last question 5 is exemption in respect of post office in SB interest. Like guys, if you're talking about the exemption in the like post office, well, post office, talking about the post office, then I must say to you that if you're talking about the post office, then it is exemption up to 3500, but in case of joint account it will be 7000. So the option is single, so it will be 3500 only. So B section is done. Let's talk about the section C now. Section C is whether it is true or false. Okay, so talking about the first question, the interest on deposit certificates issued under the gold monetization scheme 2015, it is exempted from tax. So whether it is true or false, so that it is true. Why? Because as per the sub clause 4 of section 1015 exempts interest on gold deposit bonds issued under the gold deposit scheme 1999 notified by the central government. These bonds are also excluded from the definition of capital asset under the section of 214, and therefore transfer of such bond is exempt from capital gain tax. Now next is the monetary limit of 5 lakh in respect of gratuity received by an employee covered by a payment of gratuity in 1972 is exempted from tax. So well, this is false, because the government of India has now introduced the gold monetary scheme, which we have already discussed. Because second, which is, first of all, let's discuss about the what is gratuity. Well, gratuity is the sum of money paid by the employer to an employee for services rendered in the company. However, gratuity is paid only to employees who complete 5 or more years with the company. It can be understood as a form of tip paid by the employer to employee for service offered by the company. Since tips are a function of culture, various countries have various gratuity limits that are doled by the employer. Well, so this is option is false. Now next is medical insurance premium paid by the son for parents or senior citizen is deductible up to maximum of 35,000. So well, the option is wrong here, because this up to, because that a spouse is a senior citizen 60 year or above, then the limit goes up to 30,000, not 35,000. It's a 30,000. While in case of his own, like, you are allowed to claim a deduction of 25,000 as a budgetary year of medical insurance. Now next is 30%. Well, in order to able carry forward loss from house property, the return of income must be filled before the due date is specified in section 139(3). Well, the question is, if you have a loss, then you have to pay at the same time, same year. But no, that option is false, because in case of individual taxpayer, if any loss was incurred in the previous financial year, then the filling tax return is not mandatory. Next question number 5. 30% of additional employee cost incurred by the employer is deductible under the section of 80JAA. So guys, this answer is absolutely correct, true, where the gross total income of an SC to whom section 44AB applies include any profit and gain derived from business. This shall be subjected to condition specified in section 2 be allowed in deduction of an amount equal to 33% of additional employee cost occurred in the course of such business in previous year. Okay, now let's talk about the last section now. Fill in the blanks. When a director of a company receives 30 lakh by the way of non-compete fee, it is taxable under the head of profit and gain of business or professions. So answer will be what? Profit and gains of business or professions. Well, next question is, when unrealized rent is received based on the court decree, but at the time of receipt the property was not owned by the SC, it is taxable under the head of income from house property only. Now third question is, when the Mr. Ashwin received 20,000 as a scholarship for meeting the cost of education. Well guys, scholarship is fully exempted from the tax, so answer will be exempted from tax. Now last two questions, the income computation disclosure standard ICDCS income computation disclosure standard will apply only when the SC adopt the mercantile or accrual. Last question is, inspection loss can be carried forward from maximum period of 4 years after the year of such loss. Guys, so here we have completed the MCQ types with combined considering 25 marks. So guys, if you like the video, please subscribe the channel and like the video please, and share with your friends so that it will be helpful to them. Thank you for watching the video.